Good morning, everybody. Luis here. Hope you are all having a wonderful day. And today is Wednesday, January 18th, and this is your daily mortgage rate update because it's important to stay in tune with the ever-changing mortgage interest rates. And wow, what an update I have. Forget the interest rates for a moment. Remember I said that we were going to have a slow week? Well, that's not going to happen anymore. These two reports were published and were a huge miss. So the first one's going to be the producer price index, which is the inflation report for businesses. And the second one is going to be the retail sales report. Look at this, retail sales month over month. It was forecasted at negative 0.4, and it came back at negative 1.1%, which is huge, meaning retail sales are down. So inflation is really having an impact on the economy. And then we look at the producer price index, which is this is the inflation report, but for businesses. And this is important because eventually that price will translate to lower prices for the consumer. We got the consumer price index, and this is the producer price index. So month over month, look at this. The forecast was supposed to be negative 0.1%, and it came back negative 0.5. Seriously, this could be the first sign of the Fed pause, meaning no more rate increases, no more rate hikes, which means lower interest rates, which means more buyers entering the market, which means more competition, which means higher prices due to the bidding wars that are going to come right back as the mortgage rates drop. So again, active home buyers, if you're sitting on the sidelines waiting for the prices to drop, now is the time. Don't wait. Let's look at this 10-year yield. See what's happening with the 10-year yield. It looks like it's at 3.42%, which is about 12 basis points lower from yesterday. And we love this. Remember, the lower this goes, the better it is for rates. And look at the 30-year bond, 5.5% bond. It's at 101.48, which is, again, up. And it has been going up. It tested 101.75, which is huge. It's trying to break through to the top. And remember, the higher this number moves, the better it is for mortgage interest rates. So let's move on and review a couple of scenarios to see the effects these market changes had on the actual mortgage rate. Let's start with this $500,000 VA purchase with zero down. 740 FICO score. It's a single family residence and it's owner occupied. We have a 5.75% interest rate. APR is 5.786. And this 5.75% interest rate yields a $955 lender credit that can be used for closing costs. The payment for this purchase would be $3,501, and that includes the principal, interest, tax, and insurance. Moving on, we have a single family residence, owner occupied, FHA loan, 740 FICO score, and we are looking at 5.75% interest rate. So it's the same as the VA loan. APR is 6.804. And remember, it is higher because we have to wrap in that FHA upfront mortgage insurance premium that the VA does not have. The payment for this scenario is going to be $3,788, and that includes the principal, interest, taxes, and insurance and mortgage insurance because they're putting less than 20% down. And finally, we have a conventional loan. Conventional purchase, $500,000 with $100,000 down, which leaves the loan amount of $400,000. That's a single family residence, owner occupied, 740 FICO score, and the interest rate is 6.125 with a 6.163% APR. You get a $31 lender credit for this interest rate, and the payment is $3,013. That includes the principal, interest, the taxes, and the insurance. Let me know if you would like a personalized quote like this for yourself, or visit me at prequalifiedwithluis.com to learn more about the benefits of home ownership. And as always, I can't suggest that you lock today or not lock today because every single situation is different. But I will say that if you're sitting on those sidelines, get to it. Thank you again for watching, and I will talk to all of you tomorrow. Bye now.